Welcome back to another episode of Art of Trading. If you haven't watched the previous video, the link will be provided in the I button above. As always, the presentation is for education purposes only and should not be mistaken as a trading advisory service. Before moving on, we'll look into what will be dealt in today's episode. First, we'll check the advantages of Forex, and second, we'll have a comparative study between Forex and stocks.
First, let's look at the advantages of Forex. No commissions, which means no clearing fees, no exchange fees, no government fees, no brokerage fees. Most retail Forex brokers are compensated for their service through something called the spread. Low transaction cost. The retail transaction cost, that is the bid or ask spread, is typically less. 24-hour market. There is no waiting for the opening bell. From the Monday morning opening in Australia to the afternoon close in New York, the Forex market never sleeps. This is awesome for those who want to trade on part-time basis because you can choose when you want to trade: morning, noon, night, during breakfast, or in your sleep. The next one is one of the most important factors of Forex. No one can corner the market. The FX market is sufficiently liquid that significant manipulation by any single entity is all but impossible during active trading hours for the major currencies. The foreign exchange market is so huge and has so many participants that no single entity, not even a central bank, can control the market price for an extended period of time. Then comes leverage. In Forex trading, a small deposit can control a much larger total contract value. Leverage gives the trader the ability to make nice profits and at the same time keep risk capital to a minimum. While this is all gravy, let's remember that leverage is a double-edged sword. Without proper risk management, this high degree of leverage can lead to large losses as well as gains. High liquidity. Because the Forex market is so enormous, it is also extremely liquid. This is an advantage because it means that under normal market conditions, with a click of a mouse, you can instantaneously buy and sell at will, as there will usually be someone in the market willing to take the other side of your trade. You would think that getting started as a currency trader would cost a ton of money. The fact is, when compared to trading stocks, options or futures, it doesn't. Online Forex brokers offers mini and micro trading accounts, some with a minimum account deposit of $25. It's not that you have to start with the minimum, but just means that a person who have low startup capital could also enter this vast market. Most online Forex brokers offer demo accounts to practice trading and build your skills, along with real-time Forex news and charting services. And guess what? They're all free. Since we have covered the advantages of Forex, let's move on to comparing Forex and stocks. Forex market is a 24-hour market, whereas stock market is only for a limited time in a day. Forex has minimal or no commission, whereas stock market has significant brokerage and taxes. In Forex market, the trading volume is very high and it also has high liquidity, whereas stock market is very less compared to the Forex. In Forex market, the manipulation is very minimal, whereas in stock market, a single entity could manipulate the stock prices. And with this, we come to the end of today's episode.
If you like this video, please subscribe to our YouTube channel. If you have any further queries, please put it down in the comment section, or you can contact us through our Telegram channel. The link for the channel will be put in the description below. Thank you.